We've been caught in that space for quite some time of who's good and who's bad, and using predictive tools that will sit there and say, the history's been good, so the future must be. That's not an exact science. You can reduce that liability to builders and developers if you're involved and you're partnering with them during the project to ensure that it's built well. It does save them money through that process. If they can get a better sale product at the end of the day because there's additional confidence to the consumer, then the builder and developer wins, but so does the consumer.
I'm here with Corey Nugent, CEO at Resilience Insurance. Good to see you, mate.
Yeah, good to see you too. Thanks, Mike.
Yeah, good to have you, man. So, we're working together to kind of educate consumers about the opportunity that, developers are now having put in front of them in relation to if something goes wrong with the development, Resilience Insurance, if the product's engaged, then the consumer's completely covered. But do you want to give us a bit of an overview of how it works and how you guys, deliver that outcome for the customer?
Yeah, sure. Look, at the end of the day, we're looking at building a better product into Australia that has consumer confidence and benefit. So the only way to make sure that a building is built well is to stand there when it's being built and make sure it was built well so we can give that confidence.
So one of the key things I think with what you guys are doing with Resilience is that kind of quality assurance process during the development. Do you want to talk a bit about that? Yeah,
sure. It's a program that supports all elements of the delivery cycle, from the developer to the builder to the consumer. So we get involved, we provide an independent QA all the way through the process for design and construction so that the builder and developer are protected, that it's not going to be a cost to them later, and the consumer has the surety that the thing has been looked at and monitored during construction, and they have the certainty that it's well built.
Well, I know, speaking to developers that have got the LDI product in place, they're seeing an increase in sales conversion. How much of it's about the reducing the liability for developers versus it being kind of a very effective sales and marketing tool for projects, do you think?
I think they work hand in fist, that you can reduce that liability to builders and developers if you're involved and you're partnering with them during the project to ensure that it's built well. It does save them money through that process. If they can get a better sale product at the end of the day because there's additional confidence to the consumer, then the builder and developer wins, but so does the consumer.
Yeah, I think one of the cool things is which we've spoken about in the past, is that we think that buildings that have the really comprehensive latent defects insurance, those apartments are actually going to be worth more than those that don't. What do you think about that?
It's an absolute certainty, and we're going to do a little bit of work on that, Mike, to be able to quantify that with again, independent parties. So we're going to look at what benefit does this provide to builders, to developers, to consumers. What does that mean for the end product into the future in terms of its value and the value prop that LDI brings with it?
And so far, you guys seem to be going pretty quickly. Which parts of the market are you finding are adopting the LDI product most?
We started in New South Wales and the Class 2 space, so high-rise resi. That's really taken off. We are seeing a little bit more come forward now, and it is moving into other segments of the country. So Queensland, West Australia, Victoria are really starting to take this on, and that's a promising positive sign around the country.
We're on this whole mission around improving the quality and supply of new property in Australia, and we looked at lots of different ways that we could kind of enable consumers to tell the difference between good developers and not so good developers. But I think what we've been doing with that is really, just a proxy to risk. And what we're trying to showcase to consumers is what have developers done before, and how does that help predict the quality of what they're going to do in the future. But what I think is good about what you guys are doing is that there is no proxy, and it's not like a rating that we're providing to the developer. It's a cold hard thing. If something goes wrong, you will be covered, and this is kind of what the coverage looks like.
Yeah, I think that's the critical part, is that good developer built bad developer proposition. I think we've been caught in that space for quite some time of who's good and who's bad, and using predictive tools that will sit there and say, the history's been good, so the future must be. It's not an exact science. What we want to do is we want to get involved and partner with the builder and developer, and most of them are good, despite what we see in different circles of the media, for example. Most of them are good, and they do good work. So let's partner with them while they're building and designing and make sure it's done well, so that there's no prediction it's actual, that we know the product is delivered.
And I think like most people understand that mistakes happen. And when you're doing an extremely complex high-rise apartment project, some stuff is going to go wrong. And I think when we look at developers like Mosaic and Queensland, and there's lots of other good ones where if something goes wrong, they really take it personally. But I think in order to be able to like deliver the project and fix any kind of defects that happen. But one of the things I do like about that kind of being a little bit separate is that you've kind of got the whole one throat to choke kind of thing. And if something goes wrong, rather than them chasing someone potentially in court, and certainly, there are groups that they don't need to do that, like Mosaic, as I mentioned, but, how does the process work if something does go wrong?
So the consumer is lucky in that point of view. We offer the product on a strict liability first resort basis, so they don't need to go off and run to a lawyer or off to court to run a really long and costly legal exercise to enforce their rights. We have a policy where they walk straight in the door, we undertake the assessment of where it is, and where there is a defect, we fix it.
Yeah, I was actually got a haircut yesterday. I'm not sure if you can tell, but I was talking to my barber yesterday, and he said that he'd bought a new place, and they'd had some defects problems, and he was actually having to get a loan in order to take the person to court in order to get the defects fixed. And like I think kind of not having to go through that process is a pretty important part of actually be able to run these things to ground and not needing to live with the defects.
That's right. We see these things in the media all the time, and I spoke about that before. Where we get to is that the problem is much larger than that, and we need to be on the ground and be able to support builders and developers through that. We hear around the country that the problem has been in this state, not other states. The evidence says something different.
And so do you want to talk a bit about the pricing? Because I think from a developer point of view, the concerns I think would be how much time is it going to take me? How much is it going to cost me, and is it going to tie capital up and so forth? And everyone knows developers are under pressure from a margin point of view,
sure.
and that's making projects not stack up. But do you want to talk a bit about how much does it cost, and then we've also got some data that we can share in terms of how consumers see the value.
Sure, yeah, the cost is a really important part, Mike. That developers and builders are under pressure from that margin point of view. We appreciate that, and we can work out those cost elements with them through the project, so that by the time it's completed, the cost is paid at that point. But in terms of where we sit, it's about 1.5% all in to provide the insurance as a one-off cost for the 10 years post-completion. We get to that cost, and what we do is we structure it in such a way that it's not an impediment at the start of the job, but we support the builder and developer at that point in saving them twice. One is through the inspection service, so they don't have later exposure to come back and fix things at significantly higher cost. That's a massive win for them. But more importantly, it's that upsale benefit that the developer will have in selling that product, which we can see is much greater than our product. So we support in that marketing program with you guys, for example, on making sure that the developer is maximising the sale proposition.
And we actually surveyed 150 people actively looking at buying an off-the-plan apartment right now, and it was 75% of people said that they would be prepared to pay more than 1.5% in order to have that additional coverage. And I think the more that we can communicate the value to buyers, the more of it can become like a profit center for the developer, as well as kind of managing a whole bunch of other risks. Because ultimately, we're all competing with the established market. It's established versus off the plan. Right now, off the plan is attracting a real premium from a cost point of view, and that's off the back of some of the supply constraints and cost escalation in the construction process. But I think if we can find ways to rationalize these costs, like with what we're doing with you guys, where the consumer is prepared to pay a little more, that kind of builds that value story when you come to off the plan versus buying an equivalent established apartment.
It's a really good point about that value proposition, Mike, particularly in that space with your research that you've done. 1.5% of the cost of the apartment is dramatically different to our cost of the insurance. So when I say it's 1.5%, we're talking 1.5% of construction, not development. So the consumer is saying they will pay 1.5% of the development cost, which is a much higher number. So it changes from a cost for the developer to a profit centre.
Because obviously it doesn't include the developer's margin. It doesn't include the cost of the land.
Land acquisition, all of the planning costs, all of the work that they go through to get ready, all of those costs are not included in that 1.5%.
See, obviously this seems like, a a good way for us to be addressing some of these issues. And what do you think about the role that the government has with this stuff? Because ideally, from my point of view, they could be considering picking up the tab to help the supply side.
Yeah, look, that would be a great way to support the industry, in my view, that if the government were to step in that space. Governments have been talking for a long time about the supply side of the argument, that we need to address the supply side. If this is a point where it supports the industry to produce more product, that is an easy win from my point of view for the government to be able to pick up that proposition and take that forward.
At the end of the day, it's like the developers can't just keep having more and more cost layering on them. Of course, it's going to have to be passed on to consumers. And I think it seems like the government often looks to the developers and into the property market to take money from. But in my view, if they're looking for ways to really address the housing crisis that we've got now, they don't need to add. They shouldn't be adding more costs to the developers, but they do need to give the consumer, assurance in order for them to have confidence when they're making that call. Should I buy this established apartment or should I buy this off the plan one? And I think, from a practical standpoint, based on what the data we're seeing from the market, is that consumers do have concerns about off the plan. We know that people like the idea of this in the sense that 75% of people are prepared to pay more, but we can't have continuing costs for developers. Obviously, we can turn this into a profit centre, but this is a classic example from my point of view of where the government can step in and actually have the markets back.
Correct. The market in many areas is really buoyant, that it wants to be able to do work. There are many projects with approvals waiting to build, but they can't get the feasibility to work.
Yeah.
Because we keep adding costs to it, we keep adding taxes to it, we keep adding elements to that delivery cycle, which the developer can't pass on to the consumer. That price point is at a stage where they can't sell extra cost into the system. The government can really support this and quickly get to a position. There is many projects waiting to commence. They could quickly get a supply position going by taking exactly the approach you've mentioned.
And I think one of the things about this is that I think the government in general is cautious of doing things that are going to just skyrocket prices again, because we also have the other side of the equation. You've got supply and then you've got affordability. And obviously those two things are kind of linked. But whereas with this, I think if the government is paying for the LDI product, it's not really going to push up the price of the apartments. It's just going to reduce the risk, which is going to help conversion. And it's not going to put the onus of that cost back onto the developer. And it's going to make off the plan a more attractive value proposition on a relative basis to establish.
It is. And you look at the evidence post-completion on that, Mike, that we've got to look to a life cost proposition here, that yes, there is a position, as you stress, but what does a consumer experience post-completion as it sits right now without LDI and without these mechanisms in place? It is additional mortgages or loans to pay special levies. It is court time. It is lawyers. It is angst in that space to have these things fixed that could have been addressed with LDI and inspections during construction, because we have better builders, but take that heat out of the owner where there is a claim, that can be addressed by the insurer quickly without all of that angst or need for additional financial burden.
Yeah, and I think the reality is like it's just the market's inconsistent, and I think that's one of the challenges where there are developers that are doing an awesome job of it, and there are a few that aren't, and that's kind of bringing down the average. And unfortunately, the media will cover the worst case stories because that's what drives clicks and impressions and things. But
it does.
It's kind of unfair on the developers that are doing the right thing, and I think the more things that we can do to have a more consistent outcome for the consumer and it be a positive one, I think that's the thing that's going to give consumers confidence and hopefully, justify that the price gap that currently exists. And as that narrows, I think that'll help with the sell through of more projects and bring more supply to market as a result of that.
It has to, Mike. So from that point of view, I mean, you're dead right at your first point around some are doing, or most are doing a great job and some are not. It's one of the key parts of this inspection program that if you're involved in the design and the build phase at that point, it is one of the key elements. Those that are not, that do have the cover, that are working through that space, are found before the consumer takes possession. So they're either required to fix it or the cover can't incept. Outside of that, where we all get it wrong and there is a defect that none of us picked up that occurs later, you've got a 10-year insurance policy off the back of it that is going to protect the consumer without them going to court. So it's a win for the builder and the developer and the consumer, but on the demand side, it brings about that increased build.
And, you know, we cover a lot of the projects that are getting the LDI because we think consumers, we know from consumers they care about this stuff. We've actually had a lot more consumers asking us about it. Obviously, when we send millions of emails each month, and we get a ton of replies, as you would imagine, from consumers. And we've noticed that as a real trend as we've started marketing and showcasing more of the projects that have the LDI product. People are asking us, emailing us back saying, does this have LDI? Does this have LDI? In the Victorian market. So who are some of the people that have been the early adopters for you guys? I mean, not even early now, but like who are some of the people using the product?
Well, we've got Urban Property Group, for example, the first in Australia. We've got Daycorp. We're speaking to many of the really large developer groups now and builder groups. So it does have a touch. These guys are talking about, they're aware of it, and they want to protect their position, but also their consumers and upsell that product. So where people were worried about this is going to be the ones that aren't doing the right thing that are going to race to this product, it's exactly the opposite. It is the good names, it is the good brands, it is the good developers and builders that are asking the question because they back what they do and they want to produce good product.
And I think that's, I completely agree. You know, when we first spoke, I actually first heard about it from Urban Property Group, from Patrick, and he told me about it. And, you know, I thought, geez, I hope this does catch on with the broader part of the market. But, you know, I think the government has an important role to play where, you know, it can be tempting, I'm sure, from them, and they get a lot of internal pressure to add more taxes, and they want to listen to the voice of, you know, their constituents. But at the end of the day, if every kind of initiative that they want to put forward ends up costing developers more money, it's just going to mean that we continue to have these supply side problems. So from my point of view, you know, this is one of the practical things that the government could do to really, you know, drive this. Obviously, the cost equation is now is stacking up for developers in the sense that, you know, people are prepared to pay that premium, and it's just about us being able to communicate that at scale and giving people confidence and not a proxy. Like, you know, our product, as I mentioned before, our product is designed to kind of help give consumers confidence, but how do you kind of just put a rubber stamp on it and be like, you don't have to look at the past performance to indicate what's in the future. It's like, let's just lock it down.
Exactly right. It makes a lot of sense what you're saying, Mike. So from that point of view, we can get supply into the market and we can get it quickly because these guys will commence if that feasibility is there. And this is a critical mechanism to drive that. It's a very easy step to take. What is it costing the government now in terms of the on-cost of all of these disputes and problems that we see in the market where government needs to step in or support these propositions or run through reform programs? It's costing a lot of money. This is a really easy win to facilitate both a supply uplift, but also a confidence win in a place like Victoria where we could really do with that added supply and confidence proposition.
Well, mate, thanks for stopping by. Always good to see you, my friend, and keep up fighting the good fight.
Cheers. Thanks, Mike. Really appreciate it.